Joining us now to discuss this is, of course, Forex Global Head of Research, Matt Weller. Matt, welcome back.
Hey, thanks for having me, guys. Good to be here.
Good seeing you. So, Silvergate, what's its effect on the market here? Is it as extreme as it seems, or are there other aspects of it? Was this Mt. Gox discussion as well a factor in last night's sell-off, or is it mostly Silvergate?
Well, the timing is very interesting because we saw all those headlines around Silvergate really hitting throughout the U.S. day, and then the sell-off in the crypto market didn't hit until toward the U.S. close and when Asia was coming online. So to an extent, that leads me to believe there was at least some impact from a story other than Silvergate. But just focusing on Silvergate right now, it's a very ugly situation, which you probably don't need me to tell you. It appears to be entering a death spiral. I'm not telling you anything you don't know, but the stock is down 95% over the last year. And I think it's notable that the FDIC usually shuts down failing banks on Fridays. It is, of course, Friday, so that they can work over the weekend. So not to speculate too much, but we might not be talking about Silvergate's death spiral for much longer. In terms of the market implications, there's some potential perhaps for client funds to be more difficult to access or be less available, perhaps. But I think the biggest, most notable risk from Silvergate is it just further enhances the regulatory risk for the industry. There were already concerns about a spillover from crypto into the wider banking system, and this is not going to help. So that's what I see as the big market impact and perhaps what's led to this recent down move we've seen in the crypto markets.
Well, Matt, you said that Silvergate may not have been the event that brought down Bitcoin more recently. It might have been something in Asia. What could that be?
It's hard to say. There's not a clear story. I do think the Mt. Gox rumors are notable to an extent that's always lingering over the market and something that traders can fear. And it's kind of attributed for every drop that we see without an explanation. Perhaps it truly was to blame here. Maybe traders just digested the Silvergate news and realized it was a bigger deal than expected. So far, it doesn't look like the Silvergate issue is leading to broad contagion. So hopefully that's relatively isolated, and we may have seen most of the drop associated with that news already.
All right. Well, in terms of Bitcoin, you say that the worst of the crypto winter is likely behind us, but we still may be seeing a premature false spring. Explain what you mean there.
Well, just looking back at what we saw around the FTX collapse, and I had the opportunity to hop on with you guys right in the wake of that. It was a really dire situation. And I would note that there was perhaps the most forced selling of crypto assets that we've seen maybe in the history of the industry, certainly since Mt. Gox. So I think that represented the peak, the ultimate, the peak pessimism, if you will, the trough, perhaps, for the market. That being said, we've seen a pretty strong rally, and that's in the face of continued rising inflation on the macro side, which is likely to lead to continued higher interest rates from the Fed and other major central banks. That should be a negative for risk assets like Bitcoin. So I think the regulatory environment, along with the macro environment, is something that could cap crypto assets in the short term. I wouldn't be surprised to see, for example, Bitcoin retrace back down to 20,000, maybe even 18,000 to sort of retest those lows. But at least based on what I'm seeing so far, it does look like the depths of the winter are behind us, even if we're getting that sort of random 60-degree February day that has us all wearing shorts. We might have to put on the snow pants again soon.
Yeah, when it comes to some of this, the macro issues, for a while at least, the markets were looking at a potential Fed pivot sometime towards the end of the year. But it seems as if higher interest rates are going to be persistent a lot longer than that. And I'm wondering here if what we're going to see is this risk-off trade last also longer than expected, and if that will have a long-term effect. At what point will you say, look, you know what, interest rates aren't going down anytime soon. Inflation still remains an issue for the Fed. That should scare away people from taking on these higher risk trades like buying Bitcoin, like buying ETH and the alts and things like that. At what point do you just say, well, you know what, we got to capitulate here. this isn't gonna go well for a while.
I think it's kind of a nuanced answer to a kind of a nuanced question. I do think the people who are going to throw in the towel likely already have, at least en masse, back in November. But I do think that higher inflation, higher interest rates are here to stay. Perhaps the COVID and the massive stimulus we saw there sort of marked a secular peak and a change in trend from where we had persistent disinflation, the proverbial Fed put, and really kind of a white knight always riding to the rescue when markets got into trouble, to more of an environment now where inflation rather than economic growth is the key limiting factor, where anytime central banks start to cut interest rates, if inflation picks up, they're going to raise them again. It's almost like a Fed call that might limit rallies in risk assets. So I think it's unlikely we'll go back to the sort of halcyon days of 2020 and 2021, where risk assets continue to rise all the time. But I do think there's a secular bullish case for the crypto market. It might just be more slow and steady than going 20K to 60K in a couple of months like we saw recently.
Some of the macro factors that you're looking at include Ether supply. And ahead of the upgrade here, the Shanghai upgrade. So can you kind of go through what you think that will have in terms of an effect on the ETH price against the dollar and the ETH against Bitcoin?
Yeah, so this is a narrative that I foresee gaining more strength. I don't know about you guys, but when I first heard about Bitcoin, the idea of a capped supply, you know exactly how much Bitcoin there's going to be, and it's going to peak at a supply of 21 million in the year 2140, was very compelling. And I think, especially in our current macroeconomic environment, that limited supply is very compelling. But what I think the market hasn't made the jump to yet is the idea that Ethereum already hit its peak supply. We're all going to be dead by the time Bitcoin hits its peak supply in 2140. Ether hit its last year, and that's in the depths of a bear market. This chart here shows how supply is varied. Essentially, anytime someone's transacting on Ethereum, there's a portion of that asset that is burned. We've now entered persistent deflation, and that is in the depths of a crypto bear market or a crypto winter. So if we do see some of those use cases that people have been speculating actually gain traction, that's where that burn could accelerate, and we could see Ether supply actually declining by 1 or 2% per year in the next bull market. And that could really add fuel to the fire and could be what powers the flippening narrative, which is one that I think many have buried, but could certainly be in play if that plays out.
So long ETH, short Bitcoin. Against each other, not against. Yeah,
I was going to say long Bitcoin, long ETH. If you've got that long-term perspective, but longer ETH perhaps might be a takeaway if you agree with that analysis.
Hey, let's look at some BTC long liquidations. So exchanges liquidated longs or bullish Bitcoin futures worth over $62 million during Asian hours, according to data from Glassnode, and that's the highest amount since August. Short liquidations, on the other hand, worth just over $500,000 were also observed. Is this contributing to the recent market movements we're seeing, Matt?
Yeah, absolutely. It appears to have exacerbated the initial sell-off that we saw overnight. And that sort of forced selling is notable. Perhaps the market got too far ahead of itself. As we've alluded to, there's a compelling case, I think, that the bottom is in for the crypto market, but that doesn't mean that it's going to be smooth sailing ahead. And markets periodically just paint a very bullish picture and don't consider the downside once we may have seen a long-term shift in trend. As I've noted earlier, it's going to be 2 steps forward, 1 step back in the most bullish scenario for the crypto market moving forward. And that's a good example of what's happened last night.
All right, Matt. Thanks for your analysis. That was Forex.com Global Head of Research, Matt Weller.